Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. Prices during late April and May pushed up through some pretty significant congestion dating from September 2012 between 513 and 3/4 to 519 and a half. Despite the outside weak pattern made 2 weeks ago, a pattern that is the lesser cousin to the key reversal. Now, despite this pattern, the market has even this week not fully stabilized over the bright red neckline extension below, currently at 524 and a half. And that's of the April to August 2024 head and shoulders top. Though it does look like the market is trying to make this bright red neckline a base of action. Additionally, it's something I've also pointed out last week. Prices are also trying to stabilize over the July 23 high at 526 and a half. Interestingly, I also pointed out last week that prices were at the same time being capped by the combination of the March 23 high of 540 and 3/4 and a dark blue middle time above, currently at 548 even. And that's of the dark blue mid-March to mid-April bullish Andrews pitchfork. I drew this pitchfork 3 weeks ago to give an idea of the bullish angle of attack of this market, and it's been quite successful so far, despite the dip below the dark blue lower time late last week and early this week, and especially given the short duration of its foundation as a pitchfork. Between last week and this, the dark blue middle time has moved up and away from the March 23 high and is now approaching the significant 61.8% absolute Fibonacci line at 550 and 3/4. So this leaves the March 23 high vulnerable. You see, this move higher started 3 weeks ago, and it has been enough to see the start of the second leg for a large bullish halfway hesitation pattern, a pattern I put forward as an idea back then. Thus, the question I had back then is, from where do we measure this bullish halfway hesitation? Is it from the changeover gap higher at the start of March, or from the changeover move in early February? I had thought about this, and I decided last week to look at both. Thus, for the March move, we had a primary target up in the 507.5 area and a harder secondary target up in the 521.5 area. Interestingly, both targets for this pattern have been achieved. For the February move, we had a primary target also in the 521.5 area, so already achieved. But we still have open a much harder to reach secondary target X up in the 544 and 3/4 area. I'll be interested to see if prices can manage to reach target X. Now, I should point out one further item for this bullish pitchfork. There is no what if fallback scenario here. There is no possibility for this dark blue bullish Andrews pitchfork to become a shallower bullish shift pitchfork. So is this pattern or it's something else completely? So watch this space. Winnipeg Canola. There have been a number of patterns that have developed here, some with direct influence on the market, some not so much. But only 3 have ended up showing the way. Thus we have 2 larger and long-term patterns and 1 more recent derived pattern. The first longer-term pattern I talked about 6 weeks ago when I said, and I quote, an early February to date bullish halfway hesitation, and possibly a late December 25 to date bullish halfway hesitation. Thus for the former, I would have a primary target X up in the 773 area, and a secondary hardest to reach target X1 up in the 815.60 area. For the latter pattern, it would give a primary target X2 up in the 810.60 area, and a secondary much harder to reach target X3 up in the 877.70 area. We're interested to see how these patterns develop and whether the market will hold with the February base pattern or try for the harder December 2025 base pattern. And that's the end of the quote. The first primary target X at 773 even has already been reached, and last week we were not too far from reaching the alternate primary target X2 up at 810.60, as well as the prior secondary target X1 up at 815.60. The move higher the move higher in the first part of last week was prompted by the week before's weekly key reversal up, which I had warned about. This leads to my second long-term pattern here, and perhaps the more important one. I spoke about it 15 weeks ago, and I said, and I quote, "I've also drawn in the meantime a March to December 2025 bullish Andrews pitchfork. And I think the middle time, currently 824.80, I think the middle time may become important. This pitchfork is now highlighted in bright pink on my daily chart. Has so far not had any tines, even now, no tines bar the lower time back at the start, and that held back then. No tines have been tested. However, I still think this pattern may become very important in the future. So please, please, please keep it in your mind and keep a watch on the bright pink middle tine above. The final and recent pattern is the finessing of the original bullish Andrews pitchfork I spoke about last week, with the mid-April, mid-May action into a shallower dark blue bullish shift pitchfork, which does seem, with one small aberration, to be showing the very recent bullish angle of attack. Prices today are in between the bright red middle time above, currently at 780.40, and the bright red lower time below, currently at 755.30. However, we have been rebuffed last week by the overhead Fibonacci and other congestion from 799.90 up to the 50% Fibonacci line of the May 19 to April 22 move at 820.60. So some caution is advised as we head back higher. Bursa Malaysia crude palm oil. To start with, as I've done here for most of last year and now into 2026, I'd recognise the wide congestion area that was overhead but which became a support and is now once again, well, just a big congestion between 44.08 to 45.59, even though we are towards the upper side of this congestion come resistance. Prices, which had since late March been up over it bar one failed attempt lower, mid-April, finally punched their way down through it 4 weeks ago, but could not sustain the move lower with an original gapping action higher, changeover or otherwise, then topped out for a second time 3 weeks ago, dropped down, and then 2 weeks ago gapped higher once again, only to top out early last week, and in the process filling one of the two gaps made in the last few days. The second or lower gap in the last few days was filled in earlier this week. Please, please, please continue to remember this congestion area as it is important. Now, 4 weeks ago I asked a question here, and I quote, "However, the question here is the same as elsewhere in the veg oils and oilseeds. The cap higher and significant supports below, is the market forming a topping action, or is it some form of bullish halfway hesitation? Whereas elsewhere the markets have seemingly embraced the bullish incentive and gone to try higher. Here, well, here it is not so obvious, and indeed it's not obvious if we are forming either a topping action or a bullish halfway hesitation." End of quote. All this has left us with is the 44.08 to 45.59 congestion, a pattern I drew 4 weeks ago of a mid-April 26 to date very shallow, bright green, quite shallow bear channel, currently at 43.17 to 46.53. Right now, once again, we're approximately midway within this bright green shallow bear channel. And with last week's peaks, we have seemingly legitimized this pattern as it is now 3 touches on the top side and 2 touches on the bottom. So this is the current pattern here that is driving this market, and I would watch this one very carefully for the next direction. However, just be aware of the possibility of false breaks, which, given what we have created, could be quite high. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.